Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's going on, everybody? This is Brinks Trades coming to you live with another week of breakdowns. Hope everybody is doing good. I'm actually going to share my screen. Let's get into it like that. So, dang, I got my terminal up. Let me make my screen smaller. Hope everybody's doing well. Hope everybody is doing well. I am on a little bit later than I usually go, and this is only because I just had life got in the way, so wasn't able to trade. So I guess wasn't able to come on earlier. So this is gonna be really quick in comparison to some of the previous calls that I've done. One, because it's 7 o'clock my time. And two, I know there's probably not going to be a lot of people hopping on at 7 o'clock at night, Eastern Standard Time. Maybe some West Coast people, or maybe people in other parts of the world are just starting to wake up. But it's the weekend, so I'm not going to spend too much time on here. So if you guys don't know me by now, Brinks Trades, the resident indices futures analyst for Trading Nut podcast. This is also streaming on my own platform as well, which is the Brinks Trades YouTube channel. So hopefully you guys are seeing it on one of those two channels. If you don't know me by now, so I'm a day trader. I've been day trading for almost 10 years. It'll be 10 years, technically 10 years in March or in December, when I first started trading or learned about trading in March 2015, when I think my first week actually trading in the market. So it's coming up on 10 years. A lot has changed for me in the 10 years. I started out in Forex, went to the indices market a couple of years ago. And so it's been a really crazy journey for me. Got funded, millions of dollars in the prop firm space, both with Forex and futures. I actually was messing around last week and passed the 250K challenge with Apex. I think you guys can see that right there. So I'm a person that when I trade in the markets, I'm a firm believer that if you're going to learn from somebody, or if somebody's going to be, if you're going to be giving people your time or even your money, right, in some cases, to learn how to trade for some people, then they better be able to prove what they can do. And so, I'm verified. So what I want to do is just kind of go through a couple of the breakdowns for the indices market, and we'll go from there. And if you guys have questions, obviously throw them in the chat. Same as always, love to see where people are from. So if you guys shout out where you're from in the chat, it's always a cool thing to see too. So if you know me by now, you know that I want to start with dollar index, and I'm going to scoot over. See if I can make this a little smaller. There we go. So I always start with dollar index. Again, just because I want to see where the market's going with dollar, because if we figure out where dollar's going, then we can get a good understanding as to where the market could run to officially. And so last week, what I saw is really, over the past couple of weeks, we saw the market really reach for a low, really kind of to come here and take out sell side liquidity here at 100 points. 0.7 really tried to wick past that low and then had an immediate break of structure upwards, where we took out this swing high here. at 101.52. So I was looking for bullish prices this week. I thought potentially we could see the market really dip back into this zone here and then go higher. And so what we actually got was, I wanted to see ideally the market kind of dip down a little bit more. We didn't go as low as I thought we would. We just kind of started running up towards the highs. And we really ran for this level of buy side. So last week I called out that I wanted to see the market really come back to this zone here and then um, potentially get up into this weekly gap. It doesn't look like a fair value gap on this time frame, but it is the weekly fair value gap. And we stopped just shy of this. So I would not be surprised, depending on the week. I want to still hold a bullish bias on this. So I would not be surprised if we came back down and did something like this, where we came back down into that gap, or maybe not even that low. I'm going to have it drawn up this low just in case, but something like this, or maybe even down here and then went higher for the week is kind of like my best case scenario. I do think our final target for this week, regardless, is this gap. And so depending on how we hit this, if we hit this first, this could set the stage for us to have a bearish week, right? So we'll do something like this. Or, the market will do something like that, right? And so I'm looking, obviously, to really kind of take a look at when we hit this gap, whether it's very early in the week or later in the week, and it'll kind of let us know what the trend is, both for this week and probably going into the next week as well, or this upcoming week and then the week following. So really, overall draw on liquidity is this fair value gap. So I want to see how the market reacts, and I'll be looking for opportunities to get long into this gap, whether it happens again early in the week or later in the week. Tony Go said Baltimore, Maryland. I got people in Baltimore, man. A lot of my family is from Baltimore. That's what's up. So, okay, so that's dollar index. What I want to do now, and if you look at the weekly here, you can see that there's just clean highs right here that haven't been hit. And so I think that this is going to be the overall draw on liquidity again, this weekly fair value gap there. So I want to see us run into that. Ideally, I'd love to see the scenario where we run into this imbalance here, kind of mitigate that a little bit, and then run higher. Something like that. We run into the zone here and then go higher is what I would like to see. Best case scenario. There's also a little weekly volume imbalance right here. So I will be watching this level as well. Just say make that black. So either this fair value gap here, or we might not even get this, right? And it might stay open and trade that. So that's kind of what I want to see. Once we get here, it's kind of anybody's guess whether we're going to, stay here and could run higher, or we're going to get this gap and then fall over. So I'm really just looking at this clear draw on liquidity here. So with us being bullish on dollar, I want to see bearish prices on our currency futures, right? And obviously currency pairs as well. And I think that's what we're shaping up for. So if we go to the weekly time frame on dollar, or this is 6E1. So this is basically Euro futures, or if you trade Euro USD on Forex, it's basically the same thing. So you see here, we came here and had a clean break of structure. We took out a high. Clean break of structure, right? One thing I'm always kind of wary of, if we don't sweep highs going into liquidity, I'm always wary that there is liquidity resting above these highs. These relative equal highs are here, and at some point we'll probably come back up to it. If I look previously here, we had an old high, and we respected consequent encroachment of this wick here too perfectly. And this is kind of an example of what I call out all the time when I say I measure the consequent encroachment, or the middle 50% level of old wicks, because a lot of times what happens here is these old wicks, if they have a hard time getting through that 50% level, it's really signaling that it's not going to get up here and take this buy side. And we had 1 week, 2 week, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 weeks. It's almost 2 months of us price action trying to get past this high, and we broke structure afterwards. So ideally, what I want to see here What I want to see here is the market really trade back into this gap here, right? And ideally, we're probably going to be bearish on this. It might take more than a week to set up, but this gap here, and this is going to be at, let's call it 1.1023 on the high end and 1.1028 on the low end. So ideally, I want to see the market come back into this gap really to turn around and go lower and really kind of keep going off that bearishness. Now, again, because these relative equal highs are here, I feel like at some point we probably will come back up here. It's just not in the cards right now as far as what I can see. So really how we treat this gap once we come back in this range will be key. If we start to see the market really fail to respect this 50% level of this gap and really trade higher, there's also a discount wick here. I'm sorry, a premium wick here, that 50% level. So if we really start to trade above not only this 50% level of this consequent growth stream, but also this level of this wick too, there could be a chance where we could see something like this, right? But as of right now, just with everything we see, the clean breaking structure, all that, I'm leaning more towards bearishness in the dollar. I'm sorry, in Euro futures. So with that being said, that's what I'm looking for. Yeah, these highs are pretty clean. I would not be surprised if this gap gets used as an inverted and it just disregards it and goes higher and goes back up to these highs because it's just such a clean level. But I'm still gonna plan for bearishness so on this until this gap gets violated. If this gap gets violated, then we're probably gonna run up to these highs. They're just very clean. But as of right now, I'm gonna stick with the bearish bias. So I tried to trade what I see versus what I think is going to happen. So trading for me is kind of like a mix of like, how do we stay what the market's giving us, or kind of trade with what the market's giving us, and but also in the back of our heads, kind of look at where the market could potentially run to based on ideas of liquidity. So that's kind of always something that's in the back of my head. But ideally, I'm bearish, right? I want to see us continue to run for lows. And as far as the target goes, I'll be looking at last week's low, excuse me, or this low here at 1.488. I'll just call this outside liquidity and the target. So that's what I'll be looking for. But again, these highs, these are pretty clean, and I think there's probably a lot of money sitting up here that we could potentially run back to. So I'm running with this, but don't be surprised if you see me in a counter trend trade. If this, I'm sorry, if you see me in longs, if this weekly fair value gap fails. So that's what I'll be looking for. But ideally, I like to come to the market with one idea, and then if it fails, then maybe I'll see the opportunity to take things the other way. But I like to, instead of just having the back and forth mentally of like, oh, if it does this, then I'm gonna do this. If it does this, then I'm gonna do this. I usually like to pick a side and stick with that until I see reasons why it's not gonna work out. And then a lot of times I'll just step out and not be in the market that week. Or if it's just a very, very clean counter trend, I'll take it. But for the most part, I try not to do what you see. What a lot of traders do is like, once the price hits a level that's like, oh, if it rejects, then I'll go short. If it goes higher, then I'll go long. I feel like a lot of times you not knowing where the market's running to is causing you to have a lot of indecision in your trades. And usually if you can't frame out a target for your trades and a reason as to why the market should run there, it's going to be a very stressful trade. My trades are usually only stressful when I over leverage, and that's just being totally transparent. Usually I'm only stressed out when I have way too much money in the line. So let's go to NASDAQ really quickly. So a couple of things here on NASDAQ. Let's go to the weekly time frame. We are sitting in this gap, and so a couple of things you guys have to know about this year in particular is that this year, when it comes to indices, it's an election year. So usually what happens is, the party that's in power, doesn't matter who you support, they're going to try and drive prices up in these markets to kind of make the markets economically look like the party in office is doing a good job, right? And it doesn't matter who you support. It happens for both parties in their election years, but usually during election year, prices are really tending to run higher, and kind of make all-time highs. Got to make the market look good before election. So um, what I'm looking for is um, the market to really run towards these highs all time. The one thing that I don't like here is if you zoom out, you can see that zoom in, I'm sorry. We ran for this consequent encroachment of this fair value gap, and we're really having a hard time. Oops. Oh, this is off. Yeah, it's the daily CE. We're having a really hard time breaking through this consequent encroachment. Not to say we won't get there. We also swept this high here, which I'll get rid of this. We slightly swept this high and retraced back into the range. I think there's going to be a lot of liquidity sitting above this consequent encroachment. So it leads me to the idea that we're going to come back up here. And so I'm going to draw this line again. I think there's a lot of money still sitting up there probably, but I wouldn't be surprised if we rejected. The couple things, again, that I like to look at are consequent encroachment of these CE wicks. And you can see that we closed above CE. So I still want to lean towards the idea that we're going to go long. And I want to look at I'm going to play this out like this week. And I'm going to look at a couple levels above price. This first level is going to be 20,633. And then the top end of this gap at 20,725. I just want to see the market. I think the market's going to run here, but I want to kind of break things up and make the target smaller instead of just aiming for these old highs here. And so I really want to see how we react in this gap. What I would like to see is the market do something like this long term, like over the next couple days to weeks, is where we really get out of this gap, retest this gap, and then really go higher. But we kind of have to wait for things to play out. And there's really not a reason per se for us to kind of pick a side just yet. We hit the target. We swept our target for the week, which was this high. So we definitely hit what we were supposed to hit last week, but then we went back into the range and consolidated. So based on what happens, we could see something like this. We could run higher, or since we did hit a very obvious target that still is lined up with consequent encroachment of this daily gap, we could see the market just fall over, right? We could see us kind of try to hit this one more time and then just drop. So I don't really have a lot of information on NASDAQ. I want to stick with the bullish bias just kind of based on where we're at in the year and what's going on this year. But we could see a deeper run. And so for this one in particular, I need a little bit more information. So I'm not going to call anything right now. It's just chop, right? It's just consolidation and chop. So I can't really call anything on this right now. I will say that ideally I want to see higher prices. So let's go to ES and see if there's anything here that we can kind of run with that might help us with that. Are we at all-time high? All right, so we're at all-time high on ES. So the only thing we really can aim for as far as the target goes is this high of last week. So this is going to be probably not the best trading week for ES, but I want to see something like this. I want to see price stay above this level here let me get rid of this old target. I want to see the market stay at 5,000, stay above 5,819 if we're going to go higher. Once we take this out, I think we're probably going to really run for these lows here if we take that out. So ideally, I want to stick with the bullish bias and see something like this short run that goes higher. If this low gets violated, then it's going to be a bearish week. And I don't, I have to stick with the bullish bias right now because I don't have anything that's telling me this could be bearish. But we're trading above all-time highs, which again can be dangerous because we are, the market sometimes will retrace. But at the same time, you can't try and catch a falling knife. So you have to kind of let the market do what it does before you look for shorting opportunities. And I don't see any reason as to why we would short. So that's kind of the conundrum that we're sitting in right now. But this is ideally what I want to see happen this week. This could happen early in the week. And then it could be like a Sunday, Monday play. And then the rest of the week, we take out this high and then trade, like this once we hit here. That could happen, or we could just keep running higher, but this is going to be my target. And if I had to guess, we'll probably hit this very early in the week. So this could be a counter trend week, which could line up with a bearish idea on NASDAQ and also lines with a bullish idea on dollars. So I'm getting mixed signals right now from the market, and I want to kind of have the same thing running. If you look at NASDAQ, same thing here, trading at all-time highs. So if you look at Dow Jones, it's the same thing, trading at all-time highs. Ideally, I want to see the market again stay above this gap here. Boom. So ideally, that's what I want to see is the market stay above this low. For NASDAQ, for Dow Jones, it's going to be 42,658 is the level that I'm looking at. So ideally, that's what I want to see. We actually got our play last week. This is what we wanted to see. So that worked out pretty well. We took out the previous all-time high, which was that target. So ideally, I want to see something like this for this week, where these will be very short and simple trades, where we do something like that. If we take out this low, then it could be a bearish week. Actually, if we take out this low here, it's probably more of a bearish week. So usually, like what I like to say is these will be my fail-safe levels. That just means that if price takes out this level, then my idea for this week for bullishness is off, and I either need to adjust or I need to stay out of the market. So that's kind of where I'm looking at for that. So NASDAQ, going back to NASDAQ again, I can make the case based on the Dow Jones and the S&P that this week we're probably going to see. We could see a counter trend trade, but I kind of just need more information on Monday, and I'll be able to kind of come back for the week. I don't like the consolidation here on NASDAQ, but consolidation right before we run up and take out a major level here, and then obviously the high and the end of this fair value gap. And I don't like the fact that consolidation is happening right under the 50% level. Like it's just having a hard time breaking through that level. So we could see the market really just run. I think we're going to need Monday to kind of let us know what's going to happen. Just going back up to the daily. Yeah, I do like, yeah, I'm just getting mixed signals. So on the daily time frame, I like the fact that we stayed above consequent encroachment, right? With this candle here, we ran up above here. There should be some type of draw liquidity that's sitting above these highs. And most people will probably see this as strong resistance. So I would imagine there's probably going to be a lot of money up here. So I would not be surprised if we ran higher, just like the other ones. But I definitely want to see this kind of stay above these highs. If it gets up here, I don't want to see it wick off again. Diggs. TikTok says, "Hey, what's up? What's up, man?" So yeah, so ideally, that's what I want to see here. Is I want to find reasons to be bullish, and if that's the case, I just don't like. There's a couple things here I don't like. I don't like even on the smaller time frames how we ran up and took out these highs and broke structure afterwards. But this whole thing is really just chop, right? And so if we are going to go higher, then I want to see the market do something like this. Like take out a very clean low and then run higher. So let me see something like this. So if we're going to run higher for the week, I want to see something like this, where we take out a low and then go higher in alignment with that trend. I don't have enough information, so I can't really call it. So that's all I got for you guys. Hopefully you guys enjoyed this. Hopefully you guys are finding value in this. But ideally, I'm bullish on dollar, which means we potentially could be bearish on the currencies. So like for Euro USD or Euro futures, pound futures. I'll look at pound futures really quickly because I did not look at that one. This one has had massive sell-off too. So I wanted to see the market run for this low and then go higher. I love these clean lows here. So that kind of lets me know that best case scenario, I still want the market to come up into this gap and then run lower. If we run lower earlier in the week and then take out these lows, that could set us up for a trend running higher. But ideally, I want to see the market do something like this, where we come back into this very clean gap and then just run for these lows. If I go to the 4-hour time frame, I don't really see anything. Yeah, I could see a world where we come back up to this top of this gap, retest, and then go lower if we don't make it up to that 4-hour gap. But that daily gap is just so open and so clean that I would not be surprised if we did run to that. And it kind of gave us like a quote unquote head and shoulders pattern, right? Where we ran up to and then dropped. But really just kind of depends on how the week starts out. If that low gets taken out very early in the week, it could set the stage for us to run higher. So that's Euro futures. I'm sorry, pound futures, which is the same thing as GBP USD. If you guys trade that, you should know. So hopefully that kind of makes a lot of sense for you guys. I'll stay on for any questions. I'm going to turn my screen off. But if you guys have any questions, feel free to just hop in and say anything. But I'm bearish on pound futures or GBP USD. Euro futures, which is the same thing as Euro USD. I'm bullish on dollar, and I am kind of question mark on indices, but I could see a world where they could run higher. I also could see a world where they run lower. I don't have enough information to kind of yet, with it just being the weekend, to see what's going to happen on the bearish side of things. So I kind of have to lean bullish, but I see a world where those things could break structure and go lower too. So, and that will be in alignment with kind of like indices relationships with the dollar, with it to go bearish. So basically indices are a huge wait and see. I feel more confident on the euro side of things and the pound side of things. So I'll be looking for something like that to play out, where we run higher early in the week and then potentially take out these lows coming back. So we'll see what happens. But that's kind of where I'm at. So hopefully you guys enjoyed this. If you guys have any questions, again, I'm staying on for a couple minutes, and I'll let you know what's up. Peace. All right, peace, guys. Have a good weekend. Again, if you guys are in the mentorship, I'm doing a free mentorship live on YouTube. If you guys are part of that, then feel free to be ready for tomorrow's class. It's going to be free on YouTube. Again, uh, it's free on YouTube. If you are not part of my YouTube channel, subscribe to my channel at Brinks Trades. It is a free YouTube channel, and I will be doing my mentorship there live on Sundays, taking it nice and slow. It'll be covering, right now, it'll be covering Forex. And who knows, depending on how good the class is or how the feedback that I get, it'll be potentially covering indices in the future. So if you guys want to learn to know how I trade, then you can look at that class and again, find me at Brinks Trades, BRINX Trades. Appreciate it, and y'all have a good week.